Hello and happy new year. Welcome to episode number 13 of the 11FS Spotlight Show. In this weekly show, we shine a bit of a spotlight on the best and the brightest in the tech and financial services industry to try and understand what really gets them going, what gets them growing, and what they really think the future of the industry will look like. On Spotlight today, I'm delighted to be joined by Simon Paris, who is the CEO over at Finastra. We're going to be diving into Simon's views on redefining really what finance for good is, improving fairness in financial services overall, and how open technology is really the future of financial services. So first and foremost, hey Simon, how are you doing?
David, Happy New Year. Thank you for having me on edition 13. It's hopefully lucky 13, put it that way.
Indeed, yeah. I mean, I'm first show that I'm doing this year, so blowing off the cobwebs and a bit of the rust. But let's see how we get on. Eh? But we'll get into it in a second in terms of how your break's been and everything. But for everybody who's watching this, the show always works best when we get lots of involvement from you guys. So if you want to drop your questions and comments into the sidebar, we can weave those into the conversation as we go. So drop them in, and we'll see where we go. So Simon, to start us off, why don't you tell us a little bit about you? You know, give us your background. What got you into this weird and wonderful world of financial services in the first place?
Yeah, so like many things in life, I guess you can say there's a little bit of a random walk behind it, a little bit of a random journey. So my background is I'm British by birth. I spent 20 years living in Spain, 3 years living in Russia, 2 years living in France, and a year in America. So quite a cosmopolitan background. But today, London is very much where we call home. So I came into financial services and software out of consultancy. So after doing an MBA in France in the late 90s, I joined McKinsey, started advising some customers. One of those customers ended up owning a software company. I fell into software. And what I realized at that time, which was the late 90s, that software really was going to eat the world, I think was the phrase. And what I joined at the time was SAP, spent a long decade with them in multiple roles, ended up as being the president of industry cloud for them. And that's when I started to realize that software, while had been spectacularly successful horizontally, so finance, HR, supply chain, marketing, CRM, etc., was really now starting to move to a vertical or industry domain specificity. Now, I wanted to remain in Europe, so back in 2015, I joined what was then Legacy Mises, which was previously one of the FTSE quoted listed companies, held that when I joined in private equity. And over the 5 years, we've grown that business through a combination of organic growth and combination of mergers to become Finastra today. And today, we're the largest pure play software company in the world, as measured by software revenues that focuses on financial services. So a bit of a random walk, but delighted to be doing it.
Well, it's interesting, isn't it, when you've seen that consultancy side of things and move towards product, and particularly around all the implementations. There's really understanding that life cycle is important, isn't it? I should say. I mean, I remember bizarrely, one of my summer jobs was implementing R3 SAP. So
Wow.
I know SAP really well, and yeah, when I was I think I was in college at the time doing computing, and got pulled into helping people with this project. But it's SAP's an amazing beast, and then implemented in so many places. But tell us a little bit more about Finastra then. So for anybody who doesn't know, what sort of coverage do you guys have, and both geographically and from the products that you've got?
Yeah, by all means. So Finastra, pure play software. 83% of our revenue is software. The other 17% is services in support of that software. We're about 1.6, $1.7 billion of revenue, about 9,000 people strong. We have a revenue footprint that's 50-50 between the Americas and the rest of the world. We serve about 8,600 customers. 5,900 of them are banks or financial institutions. 2,700 are not, which just shows you how much financial services are evolving. I think it was in 1994 that Bill Gates said, hey, the world needs banking, but doesn't necessarily need banks, right? And we see that playing out. So what do? We do three things. We provide them, our customers, with mission critical applications. Those are the complex applications, typically in the back office, that do things like treasury, capital markets, payments, corporate lending, trade finance, cash management, digital, retail banking, those kind of applications, point one. Point two, we also do a lot and growing amount of what we call marketplaces. So, for example, in Canada, you've got 17,000 mortgage brokers on one side, and you've got 60 financial institutions in the other. 90% of what they do as mortgage broker transactions runs on our platform. We fund about $100 billion a year. So software applications, software marketplaces. And perhaps the biggest bet that we're making as a company is the third and final area, which is software platform. And that's where we invite the world's innovators fintechs, ISVs, universities, developers, you name it, to build their consuming applications on our platform so as to get access to those core applications, those core business processes, those core data sets.
Fantastic. I mean, that's a lot. And as you say, banking in its sense is not a singular thing. There's all different walks of different types of financial instruments and financial products, financial tools that people sort of create there. But you're working all over the planet with organizations, aren't you, at this stage?
Yeah, well said. So we have our software deployed in 127 countries. So literally all over the world. Literally all over the world, yeah.
Have you got a map in the office? You're trying to sort of get those last few pins, because I mean, and a lot of people don't. When I used to be at Gartner, and actually a lot of people don't know the difficulty of implementing into multiple geos for these things, because people look at regulatory opportunity, but actually regulatory compliance from a core systems perspective, implementing in all of those different geos, it's not just as simple as rolling out some software, is it?
That's very well said. Not many people realize what you say to be true, which is one of the things that software has to resolve is what's described as multi to the N problem. So you have to solve multi-time zone, multi-jurisdiction, multi-currency, multi-language, left to right. It's a complex issue to solve. Yeah, you're absolutely right.
And it's fascinating, isn't it? I mean, the core space, the banking technology space is really sort of heating up as well, isn't it? I do think we talk at 11FS a lot about the fabric of financial services. It really feels like the underlying fabric of what is creating FS. It is actually coming to a real inflection point with many big organizations that have been putting off core transformations, or there's all sorts of horror stories out there, isn't there, of people taking 10 years to get to where they want to, or 10 times budget in terms of some instances. But it does feel like that inflection point for big incumbent organizations. But as you say, the swathe of people who are sort of marching into FS as well.
Yeah, no, you again, very like-minded. So we believe the future of finance is open, right? And by that we mean open standard, open source, open architecture, open APIs, open culture, open working, you name it. And we believe that the way that we need to approach the future is through what we call Fusion Fabric.cloud. So we actually use your word fabric in what we do, Fusion Fabric.cloud. What I find so interesting, you remind me of a story. What, about 3-4 years ago, I was on a panel. I was moderating a panel, and there were a fintech and 2 banks and a regulator, and we were talking about PSD2. Everyone loves talking about acronyms, and the regulator was saying, you know what, PSD2 will require you to give account information services and payment information services, and that's what we're going to expect from the banks. And the fintech was shaking his head, and I said, so why are you shaking your head? And he goes, you are all missing the point. And I said, okay, enlighten us. What is the point? And he goes, well, listen, if I'm buying a house, the customer journey that I'm on is not a mortgage. The customer journey that I'm on is buying a house. And you, as a financial institution, should help me work out in my zip code, what can I afford to buy? What have been recent transactions? You need to help me move into that house. You need to give me a mortgage knowing that I have unstable, irregular income. And when I'm in the house, you need to optimize my utility bills. But here's the point. The point is not one of those services necessarily came from you. You assembled them to my persona. That's the future of open banking. So now when I go on stage and I do a keynote, I sometimes use a different industry to make the point. So I take a car, let's take a Volkswagen Golf. You take the Volkswagen Golf and you explode it into its component parts. And then you say to yourself, what did Volkswagen actually make? They didn't make the tires, didn't make the wheels, didn't make the ignition, didn't make the glass, didn't make the brake. What did they actually make? They made the engine and they made the chassis. The rest was assembled to your persona. You didn't buy the GPS, nor did they make it. They assembled it to you. So in our world, it's the same. The engine is the core application. The platform is fusionfabric.cloud. We then assemble to persona for the journey that the customer is looking to execute.
Yeah, it's interesting, and I very much align with that. It's an interesting one, because really what we've seen in this digital age really is kind of the opposite of that, right? We've seen sort of commoditization of products and experiences in a digital age, away from the analog world where there was much more warmth and personalization. But actually, that has really been the promise of the internet age, hasn't it? I talked with Nick Ogden on the show just before Christmas about this. The promise of the internet was a one-to-one, Aladdin's cave of data to do interesting things with. And it really feels like we're sort of pushing up on, because as you say, I mean, while everybody's worrying about improving the speed of cars or the comfort of cars, then self-driving comes along and changes everything, doesn't it? And
Right.
actually, that's really, I think, where we're going with financial services is really, do people want to do banking? They neither need banks or need banking. They need somebody else to be doing banking for them, and really that's what the expertise is brought along with it. But we'll come back to that in a second, because I think there's a whole raft of sort of conversations to go on that. But something else that you're a part of as well, if that isn't enough, because I mean that must keep you pretty busy in terms of dealing with those clients and dealing with the product roadmap and everything that goes with that. But you also chair the World Trade Board. Talk to us a little bit more about that, because that must be a pretty all-encompassing opportunity to get involved in as well.
Yeah, and this goes back a little bit to the preamble conversation you were having, we were having before we came on air, which is, what is the problem you're trying to solve, right? That's the fundamental question as a leader, any leader, we need to remind ourselves every morning, which is back to purpose. Why do you have a right to exist? What is the problem you're trying to solve? And why is that meaningful? So when you look out at a planetary level and you say, okay, in the world of financial services, what are the problems we're trying to solve? 1/3 of the planet is unbanked. 2/3 of the planet is illiterate. If you look at the businesses around the world, 90% of the world's businesses are SMEs, but there's a $1.5 trillion trade financing gap for them to get access to working capital. You can look at the global problems and say, which one of those can we play a role to do well by doing good? What can we resolve? So when I looked at, one of the things I care about is trade. And if you ask me why I care about trade, it's because somebody said to me once something which I found so beautifully simple but very profound. They said, Simon, if your society, your country, your people, if they don't have access to a good or service that they need, either they trade for it or there is conflict. Either they trade for it or there is conflict. And I thought, well, that's superb logic, but trade therefore must be good. And trade has proven over decades to bring people out of poverty and into prosperity. But the reality is there's a $1.5 trillion trade financing gap. Some people will tell you it's $2.2 trillion. And what does that mean? It means we keep hundreds of millions of people in poverty for longer. Now, the other aspects of trade are emerging concepts around sustainable trade and free trade and open trade. And, things like, for example, knowing that if you buy a diamond, it's not a blood diamond. Or if you buy palm olive oil, it didn't come from slash and burn farming in Malaysia, but was sustainably grown. So I care about trade in its greater concept. So I founded the World Trade Board through Finastra. So it's Finastra sponsored, it's Finastra funded, but it's a separate entity that can operate as a NGO, if you will. And we brought that together to bring together finance, so banks and financial institutions, policymakers, as well as technology companies, to try and debate how we can drive forward the trade agenda: free trade, open trade, sustainable trade, you name it. That's what lies behind the initiative.
Well, and I think that speaks a lot to again, the things that get you out of bed in the morning to be moving forwards. Is, I mean, I honestly think it's when you sort of stand back from the roles that we're all sort of lucky to do, then actually it's one of those ones when you look at the change that's brought about by the implementation of the things that you do. It isn't just about having more banks. It's about, as you say, it's about being in a situation where the financial landscape is being fundamentally shifted over the next couple of years, which is fascinating. Just touching a little bit on that, doing well by doing good, because I think, to put it lightly, a lot of organizations do part of that, but not many organizations sort of think about the other side of that as well. So can you sort of expand out a little bit more about what that means for you? Because I think as a directional slogan, I think that just says a lot, doesn't it?
Yes. So it's a direction that your team subscribe to. So it's purpose. So here's a great example. So if you go to the United States, and as you know, there was the US CARES Act for the Small Business Administration that launched the PPP, the Payment Protection Plan, as it were. So that was to give loans to small businesses to make sure that they were still paying people's payroll through the crisis. Now, that had to be done in a way that was never done before. So you had to have capabilities for e-signatory or e-notary because there was a pandemic and a lockdown. So we had to rewrite software in 2 weeks with 150 people working every day and weekends who wrote new software to handle $6 billion of PPP loans to about 120,000 loans in America. And that was doing well. Now, what we realized is that it also drove revenue for us, which we didn't really anticipate. We weren't in the business of making revenue from other people's misery, right? So we made about $2.2 million of revenue in those 2 weeks, which we hadn't anticipated. So the team reached into me and said, Simon, we're not in the business of making revenue from misery. We want to give that 2.2 million back to Feeding America. And it was our largest corporate donation in our history. So
Wow.
what does that show? It shows you that the team worked nonstop for 2 weeks, every night, every weekend, every hour that they had. They did $6 billion of loans to 100,000 individuals in a 2 to 4 week process that created revenue that they then chose to give back. And
Yeah,
all of
that's
that,
amazing.
it's amazing. It's amazing.
It is.
Yeah.
Well, that, I mean, that speaks a lot for, I mean, a lot of these things, and I know when we spoke before on FinTech Insider, culture is a really big thing for you in terms of how culture is manifested, but also maintained as well. So, I mean, that speaks huge amounts for that. You know, that's not a you initiative, that's an everybody initiative, but that speaks a huge amount about the quality of the people that you've got working at the company.
Well, yes, and the fact that the culture is self-sustaining is not down to me. It's not down to the leadership team. This is the culture that people subscribe to and that they protect, right? So every quarterly business review, the first slide will be what have they done well by doing good in their regions, and that could be things around the hour of code or what they're doing in STEM education for young girls, or how they're helping the province of Pune, for example, during flash floods, or whatever it might be doing in CSR or ESG, and that's how the company runs. It's a
Yeah.
thing of beauty, yeah.
Well, that's good. I mean, again, people talk about sustainability in many different pieces. You know, whether it's environmental or but sustainability from a cultural perspective. And to your point, the fact that it becomes then a self-reinforcing element, that's the sign of a great culture, which is good. Yeah, and like you say, it's not your job to be, you know, saying what is and what isn't done. It's really the framework that kind of really establishes those things. I mean, you touched on it a little bit when you start standing back from an economic perspective. We've done really well. I don't think we've said Brexit or COVID yet in which I'm quite surprised at. But I mean, in this changing landscape within where we're at, and we touched on this a little bit before we went live, but we're sort of, it's very difficult to tell whether we are, you know, in the eye of the storm, whether we're, you know, 70% through the impact of this or 7% through the impact of this. I guess one thing we can, you know, just very much kind of understand is like the world has very much changed over the last year, probably forever in terms of what people's expectations are. But how do you think we will recover? Both, I guess, from a more broad human sense, but also from an economic sense. Do you think the recovery will be as predicted?
Yeah, I think what you said at the beginning is true. No one knows. So there's different predictions out there: a U shape, a V shape, an L shape, a swoosh. You know, the one that I worry about is a K shape, which is that some of us, some industries, technology and software being one of them, will progress very nicely, not even recover. They'll just continue progressing nicely. But others will continue having difficulty down the K. Hospitality, travel, some of the other ones, music industry has been quite impacted. So those who are fortunate and privileged, like us, we have to remember that we have a responsibility to help. So never before has it been more important to lift as you rise, right? As you rise, so must you lift. Nor has it been more important to realize that you are fortunate and there are many out there who are less so. So I think that's going to be a big part of how people think. In terms of how people behave, I think you're right, David. I think people will not go back to the way it was, right? The idea of somebody picking up their laptop, going on a 2 hour train ride to sit next to a person in an office that they don't even talk to then work on the laptop, to then go home 2 hours again, that's over. So this
Yeah.
idea of 15-minute life, you know, that the Parisians invented, that within 15 minutes you have everything you need, your hospital, your school, your dentist, your social life. And yes, you can go to London one day a week or Paris one day a week, whatever you need. But I think it's a reset. It's a global reset of what matters most to us.
It's interesting, isn't it? I mean, I posted something earlier on around in this period. My only advice to people is fit work around life, and particularly in a period where we've just gone back into lockdown in the UK. Then you know, everybody's in a situation. You know, I'm very surprised my 8-year-old or my 6-year-old hasn't come in just yet. So you know, the fact that people are homeschooling and all of that is kicking off again. Fitting your the thing you do for work around the thing that really matters most is probably the most important thing. And there's a question that's come through, and actually, I guess from an economic perspective, is a good place to probably jump off from. But Dan Feeney, will we see mega bank mergers? Do you think in Europe? Do you think with the sort of weakening of some of the regions, do you think this spells opportunities for some of the really big banks to start consolidating some of these things? I know we've sort of started to see it potentially in some of the fintech spheres where actually potentially some of the weakening of the business models has led to opportunities for consolidation. But do you think we'll start to see that cycle sort of pick up again?
Yes, I think we will. I think that the question though is why. From my vantage point, if you said what is the conversation in the boardroom of a major bank, if you take the conversation in the boardroom of a major bank in Europe and in Asia Pacific, it is why is the return on equity below the cost of equity, and why has that been true for a decade? And that's the chairman and the board of directors. Down to the CEO, that immediately brings them down to the cost to income ratio. And they say, why is my cost to income ratio in the 60s when it should be in the 30s? That then brings them down to market reality, which is why is net interest income being so compressed forever? And why is it looking like it's going to be compressed for another 10 years? Well, it is what it is. We're in a very low interest rate environment. So what do you do about the cost to income ratio, therefore? Well, costs, there are only three types of costs primarily in a bank: people, real estate, and technology. And they're going to get compressed. They're going to get compressed. On the income side, if you can't make money out of net interest income, you make money out of fee-based income. And fee-based income, where does it take you? It takes you to lending, trade finance, payments, cash management, corporate channels, things where you have a transactional fee for doing that. So that's where it goes. Now, why will banks merge, therefore? If they think it helps accelerate them down the cost to income curve, right, in terms of branch compression, technology compression, people compression, or if it helps give them access to greater income growth, then yes, we will see it.
It's interesting, isn't it? I think on the and historically, I mean, if you look at those three, the people, the property, and the technology. I mean, put the two P's aside, the technology side of things. The real issue is that those decisions, all of the benefits that should come from gigantic multinational organizations, are never really realized. Actually, the idea of having a single infrastructure and a single system and a single engine never really works, and that's where we end up with the sort of monolithic silos being created, which never really drive out those benefits. But arguably, that's where some organizations could get to, couldn't they? Which is, if you were really looking, and I completely agree with you, and this sort of echoes many conversations we had over the course of 2020 with people, was nobody's really worried about, if you're in a gigantic bank, nobody's really worried about Revolut's or Monzo's features or functionality. They're worried about their speed of change, and they're worried about the cost that they can run a current account at. And those things are the things that really struggle with, because if you could take challenger bank economics and deploy it against a huge customer base like a Standard Chartered or a HSBC or somebody along those, Bank of America, whoever, that would be the real defining point, I think, for an industry that fundamentally can change. Because at your point there, if you can decommission and restructure and simplify, actually financial services can do huge amounts of good. And I think probably taking it to one of your earlier points around inclusion, if it costs 150, 160 pounds to run a current account, it's very hard to do to give everybody a current account, because particularly in a period of sort of negative interest rates that we're sort of moving towards, then actually it's really hard to give everybody banking if it affects your bottom line.
Right, I completely agree. No, what you're describing is very clearly the brownfield to greenfield problem, which is how do I convert a brownfield into a greenfield rapidly, cheaply, and stay ahead of the people who are challenging me? And it's really, really not easy. So I think it's going to come down to some very big guiding principles. And one of them, you used the word earlier that ended with shun. I forget the word you used, but we have an internal joke in Finastra that every time we hear the word shun, we know that we're moving in the right direction. So consolidation of applications, rationalization of vendors, simplification of architectures, standardization of business processes, you name it. So what do we think needs to happen? We need to think exactly where you're going, David, which is, you have to question the why you do something. Why do you build a wheel if you can buy a wheel off the shelf, right? Why are you incurring those costs yourself when you can be so much more agile? And it goes back to the Volkswagen Golf example. Why doesn't Volkswagen Golf build a GPS? Because they don't need to. They can consume it. Why don't they make the windscreen? Why don't they make the brakes? Why don't they make the ignition? They don't need to. They can consume it. So I think as people embrace this notion of open and stick to the knitting, it was Ralph over at ING when he was the CEO there before becoming UBS. He was the one who introduced the language around manufacturing and distribution. Let's be clear, we manufacture what we're good at and we distribute it not through our channels, but through any channel. Why do we only manufacture our products for our channel? That's crazy. Let's sell other people's products through our channels and our products through other people's channels. A breakthrough in thinking, right? So we'll see more of that, I'm sure.
Definitely. I think, as you say, the manufacturing, when you focus on both of those elements differently, you think differently than you would do as if you were focusing on the whole, wouldn't you, in terms of those setups? The people who build the Apple Macs are not the people who are worrying about distribution and marketing of those things. It's a very different skill set and a very different approach to it. I mean, we touched on it a little bit earlier on around sort of inclusion and the ability for financial services to sort of treat people more equally across what we're doing. And that's both, I'd say, a lot of people think financial inclusion is something that happens in Africa or far-flung places, but inclusion happens everywhere, doesn't it? I think some of the scariest statistics for me are always around the amount of people who aren't included with bank accounts in very large cities in the US. I think it's New York has a double-digit unbanked population, which is just amazing in this day and age in terms of where we're at. So, I mean, do you think financial services is doing enough at this stage to really treat people equally? And if not, why? Like, what's the inhibitor?
Yeah, so I think it's a great question. You're absolutely right. I think the number of unbanked Americans is about 35 million, which is, and as you said, a double-digit number of that is in the New York area. It's an extraordinary thing. So why is that, right? So you can fall back on excuses like, lack of documentation, right? They're illegal immigrants. They don't have the right documentation. Therefore, I can't serve them. Or you could rise to a more noble purpose saying, we should be providing these people with support, whatever it takes, right? Whatever it takes. Encouraging such a cash economy, a black economy, the lack of flow of taxes, the risk of physical violence, the cost of that cash, it's terrible. It's a terrible thing, right? So I find that documentary reason a bit of an excuse. The other, however, as you said, if it's $130 to run a current account, then even if I would like to, maybe I can't afford to, right? So we need to address the root cause of why we can't reach them through documentation, why we can't reach them through cost. And then I think as a society, and this brings us back to ESG, we need to have a little bit more focus on the purpose of why we are providing financial services. We need to get back to providing a financial service.
Yeah, I completely agree. I mean, and it's interesting, isn't it? Because if you go back to the sort of origin around, I'm always fascinated by when you start talking to an organization. If you talk somebody like Nationwide as an example, if you go back to their origin story of why that company existed, their why was incredibly clear. It was communities of people, pounds in a pint jar to allow the next person to buy a house. And off the back of that, we've got fantastic building society really serving people in a different way. HSBC has a beautiful origin story. NatWest has and actually if you sort of trace it back to that why in the first place, it is always to serve people in a different way, isn't it? Maybe sort of going back to your slogan a little bit, doing well by doing good. Actually, are we set up, do you think, as an industry at this stage where almost the hardest thing about really the gap between marketing and the reality is really that most financial services business models are sort of set up slightly antagonistically against customers rather than with them? Because I think to your point earlier on, lending fees and different things that go with it, people are really looking for help and service, aren't they? And actually, I think people are prepared to pay for great service. Your points around organizations that have done that, like Deliveroo is a really good example. Even Amazon is a really good example. I know I'm paying more, but I'm paying because of the service. Do you think we will see a sort of a shift in business models as those things really take hold?
I hope so. And I think people like yourself and your company, you do a great job of agitating people to think, right? So just listening to what you said there, you can boil it down to three things in a way. One is community, right? And that's a word we don't use very much, but we used to use it a lot. Secondly is customer journey. What are you trying to achieve and how can I help you as a financial service provider achieve it? And thirdly is where you are in your life cycle. So let's talk about each one of those. So in community, for example, which we used to have, building societies, and we used to have that notion of it. Out in the United States, for example, there's maybe 8,000 community banks. I remember sitting around a table with several of them having a kind of private dinner, and one of them was explaining that all he focused on was the notion of community banking for farmers, where he understood the crop cycle to such a degree he could provide them leasing for equipment that no one else would take up, because he knew the market dynamics and how it interplayed with the weather, right? That's community banking as a thing of beauty, right? That's a very nice example. You then move over to customer journey, right? I've been with the same bank, I won't name the bank, for 40 plus years. And I still get inbound marketing from them saying, you know what, you've potentially been pre-approved for a credit card. Like, I mean, here's the deal, right? I'm trying to take care of aging parents. I'm trying to look at managing a life between two geographies, and you know everything about me. You know everything about me. Why don't you anticipate the journey that I'm looking for, or the moment I'm in my life cycle, right?
Yeah.
And I think getting smarter on community and smarter on life cycle, those two things will unlock a lot of potential.
Yeah, I agree, and it does. I mean, we both used the word fabric earlier on, and I think that underlying fabric of those opportunities are really shifting. I mean, you've come back. This is first week back at work. Same for me. I mean, it's been a bit of a blurry journey the first week back. I've been drinking lots of coffee, and the alarm is definitely louder than I remember it last year. But what's on the agenda for 2021 then? I mean, in terms of this march towards this change, what's the big priorities that you've got set up for 2021?
Yeah, so in terms we talk in our company about three vital priorities, and we initiated these in March at the start of the pandemic, really reaching the European shores. And the three vital priorities are: number one, employee well-being, right? And that for us has become the clear number one. If our employees are well, they will take care of our customers. And well-being is now both financial and physical well-being. So we've seen too many people who are in an environment which is intolerable. It could be physical abuse, or too many people in the house, or whatever it might be. We need to make the offices available to them, but it's their choice. No manager can tell somebody you must come to the office. It is now completely open working, point one. So employee well-being is the number one priority. Number two is customer success. The customers are wrestling with their business continuity programs, the heightened state of security like we saw yesterday in the United States. So keeping our customer success in terms of keeping them up and running is the second priority. And then the third is business stewardship. We have an ability to do well by doing good, to deal with planetary problems, but let's stop talking about it and let's do it.
That's fantastic. I mean, and in that order as well. That makes the difference, doesn't it? If you take care of your people, as you say, then your people take care of your customers, and if that equation works, then the business is successful, isn't it? Again, a lot of people go to the thing that it results in rather than the things you have to actually do to create that success in the first place.
Yes, this is a time to focus on the input, which is the people.
Absolutely. All right. On that note, Simon, we better get going. I think we could probably talk for hours on this, and we'll definitely have to get you back as 2021 progresses and see how those priorities are going, and actually as we start to see these shifts in the industry, to get your views as people start to do more and more interesting things in this space. But thank you so much for coming along. Probably what would be good to last on is actually, I mean, what's your prediction? What do you think we're going to see in 2021? Because I mean, there's always I always say, in fact, Simon Taylor always says to me, my predictions are never wrong, I'm just early, which I think is a nice way of telling me that I'm wrong. But what do you think? What's your prediction for what we're going to see in 2021 then?
Well, you know the phrase, right? That forecasting is very hard to do, especially when it's about the future. So I think, sadly, the end of the beginning is going to take longer than we would all like. I think, sadly, the nature of the recovery will likely be more of a K shape. Some will do very well, others will have a prolonged area of difficulty. I think positively, human spirit is very strong, and we will all reach in to help each other. You saw that in England, for example, with this notion of eating out to help out. It was almost too successful. So I think the care for the primary workers, the care for the schools, the care for the local businesses, were all much more attuned to the word you used, David, which is community. I think the positive thing that's going to come out of this is a much heightened awareness of community, our role and our contribution to it.
Fantastic. Well, I love the point that you made around, as we rise, we've got to lift. So, I think if everybody can take that responsibility on for the course of this year, then the world will be a better place, won't it? So thank you very much for joining us, Simon. Where can people learn a little bit more about you and the great work you're doing over at Finastra?
Yeah, absolutely. So the website is finastra.com. The platform is fusionfabric.cloud, and on LinkedIn. Happy to connect with everybody and love joining the conversation. And David, credit to you and your team. You keep the conversation real, you keep it live, and you make it very thought-provoking. So thanks for having me on the show.
No worries at all. That's all we have for you guys this week, but make sure you don't forget this show. Also, if you want to catch some of the other things that are happening from 11FS, if you catch us over on Newsroom, which goes out every Tuesday at 3:30 GMT or 10:30 ET. Newsroom, we take a bit of a deep dive into the biggest news story, and there's always one every week. There's so much happening in this industry. It's good to be back, I have to say. There's a lot of things that have happened over Christmas. It's good to get back in and talk about them all. Have a great week, everybody, and see you next week. Thank you very much. Goodbye.
Ciao. Thanks, everyone.